the best investors weren't investors at all. They were entrepreneurs who never sold. There's a good friend of mine called Nick Sleep. He ran a very successful hedge fund, and he shut it down in 2014. And now he's just a gentleman of leisure, doing quite well. But there are some tremendous insights in those letters. And those insights were so strong that they caused me to make significant changes to the way I invest. And the other thing that happened also last year is I read a wonderful book, and I can't recommend this book enough. It's called 100 to 1 in the Stock Market. And it's written by a guy named Thomas Phelps. And this book actually came out in 1972. So it's about 48 years old, but it's really timeless. And Thomas Phelps is a very gifted writer, and he did a really good job in terms of explaining a bunch of nuances. So one of the things that Nick Sleep talked about was that he said, look, Walmart went public in 1970. And from 1970 till now, which is more than 50 years, the Walton family has held the stock. They haven't sold, they've just held the stock. But there have been no public market investors that have held the Walmart stock for this 50-year period, or even a 40-year period, or even a 30-year period, maybe even not even 20 years. We might be able to find some 20-year holders. And so what Nick Sleep asked is that if you owned Walmart stock in 1970 or 1980, what exactly was the facts that caused you to sell it? And it's an important question to try to answer. And the flip side of that same question is that if you owned a Kmart stock, maybe 20 or 30 years ago, what caused you to keep it? So Kmart, on a number of metrics, was a very cheap stock, but it was a business in decline. And Walmart, on a number of metrics, was an expensive stock, but it was a business that was growing and going from strength to strength. So I used to always invest until here with the idea of buying things well below what they were worth and then selling them when they got to full price or maybe a little bit over full price. So buy a dollar bill for 40 cents or 50 cents or 30 cents. And then as it approached a dollar, get rid of it and find another 40 cent or 50 cent dollar. And that's worked quite well. I think at Pabrai Funds, every dollar we started with turned into about $14 in the last 21 years. And that's after fees and expenses. But it's a inefficient kind of treadmill way to go through life. What is vastly better is if you can identify great businesses which have great economic characteristics and very long runways ahead, and hold those businesses for a long time without being particularly concerned that they may be somewhat overvalued. If it's a really good business, it will probably get optically overvalued periodically, maybe for a long time. And Nick Sleep, in one of his recent emails to me, he said that, Mohnish, the best investors weren't investors at all. They were entrepreneurs who never sold. And so the idea is that we should think of ourselves as if we were the founders or the family that owns or runs the business and have the same mindset as them. And as long as the business is improving, as long as the moat is widening, as long as things are getting better, we shouldn't be focused on valuations and such. Of course, if things get egregious, if you're a family who owns GameStop right now, you should have sold a while ago. But beyond that, I think so that's a pretty significant mindset shift for me. But I think it makes life easier. I think the returns are better. The taxes go way down. So I've gradually started making this shift in my portfolio.